Awesome. Thanks so much for joining, everyone.
Of course. So, and Amy and I are here. We're going to go ahead and talk a little bit about some investment trends and strategies Amy's been seeing. And so I'll just kick it off from the top. So I've been chatting with a few of you for a few moments. My name is Rachel Shepard. I'm the Director of Global Marketing at Founder Institute. We're early stage pre-seed startup accelerator. We operate in over 180 cities in 65 countries. If you want to learn more about the pre-seed accelerator program and where we're operating, you can learn more at fi.co/enrolling, and I'll have that link into the chat before we're done. But I'm here today with Amy Wu, who's partner at Lightspeed Venture Partners. Amy joined Lightspeed in 2019, and she has previously enjoyed both sides of the table as both an investor and operator. She was an executive for several years, most recently at Discovery Inc., a global media company with 17 TV networks in 220 countries, and at NewsCred, a growth stage marketing software company based in NYC, where she helped raise over $60 million. She has a BA from Harvard, majoring in biochemical sciences, and has summited over 14 alpine peaks, over 10,000 feet. And that's a fun fact about Amy. So I'm so excited. Amy has generously provided her time. We've chatted before, and founders learn so much from her because she's so forthcoming with the investor's mindset and how you think and the excitement and exciting things you see coming up and different trends. And so we're here today to talk specifically about how things have changed since we sat down right when COVID hit, right when the shutdown happened, and what she's seen from an investor perspective, as she's witnessed, what some of her companies have experienced, and also just what you see happening in the greater tech industry, of course. So I'm going to kick it off with some questions, but I'd love to continue to hear in the chat where you're calling in from. This is wonderful. We'd love to engage with people from all over the world. And secondly, if you have any questions for Amy regarding getting investment as a female founder, getting started, as well as any trends, things like that you see, Amy's got a lot of beautiful thoughts and really great insight on what she's been seeing happening from around the world as well. So let's get started.
Thanks for the intro, Rachel.
Yes, of course. Anything you wanted to add, Amy, before we get started with some questions?
I think you covered everything.
Awesome. So first and foremost, I want to ask, what investment trends have you seen in recent months? So just since the shutdown, just since COVID, very high level, what have you been seeing?
I think maybe I'll take a step back and just kind of explain like where people's mindsets were in both the entrepreneur and in the investor community, because I think sometimes it's helpful since we just we look at over so many companies. Lightspeed we're a full cycle fund, so we have investments early stage, like from seed all the way through pre-IPO. We have about 400 portfolio companies across the globe, and so we're fortunate to be able to see kind of across the board. What happened right when everyone went into shelter in place in the U.S. is that I think VCs kind of had a spectrum of how deep was this going to be? Was this going to turn into a recession? How should companies react? And Lightspeed, along with a number of other many other firms actually, who, especially with partners who have seen multiple recessions previously, know that in a large sort of like negative economic impacts like COVID, there's typically like there's a good chance for a longer term recession. And as a result, our first instinct was to just immediately work with our portfolio companies and then just work with them around, increasing cash runway to at least 18 months, ideally 24 months plus, in a manner of different ways. Some of our companies need to raise a bridge note, or a small equity round, or a larger equity round, because that was just kind of their fundraise cycle. Unfortunately, they hadn't raised in a couple of quarters previously, and they had just been out raising. Then there were some companies that needed to raise venture debt in order to increase runway, and we were actually very encouraging of people doing that, and so we also walked them through that. And then but across the board, particularly for companies that are like clearly either neutral or negatively impacted by COVID, we had companies reforecast their plans and take the opportunity to reduce just cash burn to extend runway. And of course, like particularly consumer and some pockets of enterprise, and I'll talk about some of the categories that fall into this category, but some companies are positively impacted by COVID trends because of the change in consumer behavior, but then also, I mean, mostly consumer behavior and also just like the shifts in where companies were spending. And so of course, like those companies need to revise their plan in the positive. Most of our companies revise their plans down. And so for a period of about 2 months, myself and most of the other partners at Lightspeed just looked really intensely inward at our portfolio and really helped every single company with this exercise. So then kind of like emerging out of that, starting from about a month ago, we really we went through the first wave of just working with companies on their operating plans, and then we're able to look outward and really see, like, well, actually, how did companies get impacted? And the categories that you can imagine are positively impacted by COVID, and that's in the areas of productivity, collaboration, online education, online health, so like digital health. Then I would say like B2B also. So like companies that maybe sell into the call center, because very high volumes of calls started coming in, and then into like the travel, insurance, fintech, finserv, and some of the other industries. And then in consumer, you've got online food, and then sort of like maybe like for home furnishing, some of these categories, and then like entertainment, gaming. These categories just massively accelerated through COVID to different degrees, but there generally were acceleration. And so, we at Lightspeed believe in, frankly, like, investing through good times and bad times, like bull and bear markets. And so we've actually been, maybe our investment pace has been decreased slightly over the last 3 months, but we've done probably like four Series A investments in the last month, and then working on quite a few like growth deals as well. I'm a growth investor at Lightspeed, and so and then you can see kind of a similar pattern with a lot of VCs, quite frankly. So I think we all kind of collectively came to similar conclusions. And right now, what companies are thinking about is there's still a ton of uncertainty in the market. I think we were all sort of wrong around how fast the impact would be for the stock market. I mean, the stock market is high. I think it's down today, but the macroeconomic trends, fundamentals still look fairly poor, with unemployment rate at 9% plus. And so there's I think a lot of people are like, I think there's another shoe's going to drop in a couple of months potentially, or maybe a few months down the road, but there's going to continue to be adjustments, and depending on like how COVID rebounds and a lot of factors. And so companies are just sort of wait on a holding pattern, waiting to see. They don't want to be too conservative, and because actually, like the majority of them have not missed their revised plans. In fact, they've exceeded their plans so far. But they also don't want to be too aggressive and hiring all of a sudden in case like a further adjustment does happen, and they need to again right size their capital structure.
Right. So is there if a founder on the call right now is in an industry that's experiencing headwind, or they're experiencing it already, what are like 2 or 3 things you'd recommend that they do right now if they haven't done them already?
Yeah. So like as in experiencing negative trends. So definitely by now I would recommend that this is just a good, like, I think in terms of, it's just a good time to get lean, I would say. A lot of our companies have gone through a whole checklist in terms of, reducing a lot of variable spend. And that's everything from actually like temporarily deciding to give up their lease. I mean, I think this is like one of the more extreme. I think something like 15% of our portfolio companies just eliminated their real estate lease because they're like, we're going to be shelter in place. We're going to be working remote 100% for some time. Through like not like reducing T&E budgets, cutting all new hires, and like such kind of like a whole checklist of things that they've done to just extend cash runway in this period of uncertainty. And then at the same time, right now we actually do have a window of I think like a good window of investing. Funds have come out. They have become more comfortable with actually writing a check from beginning to end, completely virtual. And so if you are thinking about raising money, like whereas 2 months ago, I think it was very difficult. Like now there's actually a window like where investors have now come out to do rounds again. And so you might want to think about that and go out and do a quick round of fundraise, or look into debt. That window may close again in a few months. We just don't know.
And so let's talk about that a little bit. As if you're a founder right now in this position, do you feel like there's more opportunity for founders to reach out to investors that are maybe in a different location or market from them? And then secondary to that, what does that experience look like from, when it comes to fundraising virtually? Are there any tips you have for founders in terms of getting across the table and reaching out through Zoom, basically, at this point?
Yeah. I think there's like a lot of surveys, probably still about half, or maybe even more of investors are not comfortable with doing a virtual investment yet, because so much of it is just about in person. These are long relationships that investors get into companies with. And so the in-person element was actually really important before COVID. And so I would say, because of that, it's still good to first talk to your existing investors, and then also with investors that you have previous relationships with, as a first reach out to those folks, before kind of reaching out cold to new investors. But and then if you are reaching out cold to new investors, I would really just kind of qualify them at the beginning. Like, how comfortable really are you in have you actually made a virtual investment? Action is stronger than words, as always. And then just understand from them what the process is, right? Every fund has their, similarly to pre-COVID, every fund has their own way of from start to finish of making an investment. For Lightspeed, on the seed investment side, it's getting involved with one of our seed investors, early stage investors, in a particular category, is having a few meetings, and then sharing vision, sharing some sort of early traction that the company might have. Then gradually, the investor will invite you to present in a virtual investor meeting on one of the Mondays, and then shortly after that, the investment committee decides whether to go forward with a check or not, with a term sheet or not. So that's more or less, there's variations on that, but probably what you're going to go through. And then it might be different though if you're raising from an angel investor that's not an institutional fund, right? The angel investors will have their own sort of checklist that they'll go through. But yeah, I do think that it does open up geographically, but I think maybe less so than people think, because ultimately early stage investors do tend to like to invest in companies in their geography, because they get very involved. They get involved in product iteration, et cetera. And so there's once COVID is over and shelter in place lifts, I do think people will go back to meeting in person again, maybe in a limited way. And so I don't think all of a sudden angel investors will maybe invest in on another continent, whereas before they didn't. But they might be more flexible in investing in cities within, so let's say the U.S.
Awesome. Yeah. So founders, if you're on the call right now and you're interested in building relationships specifically across the US, take advantage of this time where you don't have to fly out and be in front of an investor. A lot of people are still doing some stuff digitally. And then don't forget to put your questions in the chat. We're here to answer your questions. That's what we're here for, and to support you. So please do let us know if you have any questions, big or small, about investments. That's what Amy's here to share her insights on. And so kind of getting, where do you suggest one can learn more about investing, Shweta says? And would you mean getting into investing on the investment side or from the founder side? Actually, maybe I'll pose that to you, Amy. Either way, if you were a founder or looking to be an investor, where would you look for more information?
If you're a founder looking to get an investment, there's a lot of people who have blogged about the topic online, I would say. And so start by just quickly Googling how to run, how to you get a seed check. And there's great content that's been written online that has a general guidance. But there's a lot of I would say the devil's in the detail, and depending on what the sentiment is, we're in COVID right now, there's going to be some nuances around how to get a deal done. And so you can always reach out to one of your investor friends, just to have that kind of level of conversations. Always pretty helpful, I think, in addition to just reading. And then I would say getting into investing, it's a pretty gray area, and also there's not like a lot of like direct paths to it. Kind of people kind of stumble into being an investor, particularly in the earlier stage. There's like a really large breadth of people with experience. The most common paths are that you were a founder, or maybe like a head of product at like a company that you founded, or a tech company, and then or you're already an investor, maybe in a different asset class, and then you have a great interest in being a venture investor, and so you get to learn the space, you get to build your network, and then you get to build a network with funds that you would like to work for, and then gradually they invite you to interview, because like I think very few funds actually post positions. Like funds are really small entities, and so they're not looking to hire that many people per year, and so it's really just about VC is a relationship game, and so how you even get hired a fund is a very relationship based process.
Yeah, I would say one of my favorite blogs to read is Elizabeth Yin from the Hustle Fund. I think she writes some great stuff, and she's
great, yeah.
Share some good stuff too, if that's at all helpful. And so, okay, so Margot is asking, and she's joining us from Winnipeg. She said, if your town is small and doesn't have any investors in it, or anywhere even close, how do you get noticed elsewhere? So if you're a founder trying to, kind of look into a bigger market, what's one of the ways that you suggest doing that? Is that hiring a team in that market? Is it, how does one?
So if you're based on a smaller, so at some point, if the town is small, I think a question that founders naturally ask themselves is like, over time, as you scale, they naturally will need to like hire in other cities. But one of the things that is actually great is I always say the majority of our portfolio companies are thinking about partially just making remote work permanently. And so I do think like there is like a lot of opportunities to hire in new cities now with a new normal that is remote work, which is great, and it gives founders a lot more flexibility around where to maybe set their HQ, and the concept of HQ really has changed since COVID as well. And so I think in terms of getting noticed in different cities, participating in a larger hub, like virtual tech events, and like virtual networking events. VCs do a lot of events all the time, or like kind of like organizations like like Rachel's actually do events all the time. Way to meet other entrepreneurs and other people and investors in a particular hub, and then of course like hiring some people in that city that already know the community there is another way to also get to again know people in the hub. But like I think in terms of like naturally as companies scale, they tend to leave just the immediate city that they're in anyway, and so that's a pretty normal expansion roadmap, I would say.
Awesome. And then Rushi, I hope I pronounced her name correctly. She has a question too. She said she's working with 2 other people in the initial stages of building an MVP. When is a good time to start talking to seed investors and seed money? And I think you've already touched a little bit on this, which is like there's a lot of networking involved, but we'd love to hear.
Yeah, there is. I mean, founders I think that are raising seed funds might talk to like 100 investors. They have a list, they have a pipeline. It's a very kind of just like systematic way. And you do need just volumes and numbers game. Just talking a lot and looking for that fit. I would say in seed, pre-seed, there's kind of 2 buckets. There is if you're a founder that has like done at least one other successful startup previously, and so there's de-risk, or like can you get to the 0 to 1 phase, then investors are willing to essentially write a check into the company pre-product. Actually, you just need a crisp vision of what you're trying to build, the market. And then, kind of like your next 12 months plan, everyone should have like 12 to 18 months plan. What are you going to do with your first check that you raise, friends and family or institutional or otherwise? And they're able to raise that money. But I would say for the majority of founders who this is maybe like their first startup, you need a bit more than that. Typically, you do need friends and family who are just going to invest in you pre-product. So I think you can always do a round pre-product, or maybe with like a very lightweight like beta product on just that with friends and family. But for the next concentric circle, whether it's a small institutional angel investor, who doesn't know you, you do need some early traction. And this is where it's actually like a signal for an investor how scrappy somebody is on what kind of traction you can get while you're at MVP stage. And that can be everything from you survey like thousands of people or companies, and or you've managed to get like a couple of like B2B enterprise logos to like try out your beta product for free, or even better if they're paying you something, or you have launched a beta, or you launched test flight, like you've gotten a lot of people using it. And so I'll just give you an example, because the Clubhouse deal was like pretty crazy, and it was very, very buzzy, and all that was about 1,000 users in test flight. And so like even with that, the founder was even that founder was not able to, I mean, he didn't raise money like pre-product. He actually had launched a beta by the time he took his first like pre-seed round in. So those are some things to think about.
As to just a follow up on that, if founders, so not every founder has a friends and family round as an option, and so like what do investors think about equity crowdfunding or crowdfunding platforms? Does that often prove traction and kind of help them get through that initial stage too as well, or do you have any specific thoughts or opinions?
I think that was probably more popular like a few years ago, but I think of more recently, I haven't really, I just haven't seen that as much. Like obviously, however you get money, as long as it doesn't come with a lot of strings attached that would actually like make your company less attractive for a new investor to invest in. Like, so I would really be careful about that. Like I advise friends all the time. And they do, in the C stage, people do receive fairly like predatory term sheets where there's like a ROFR, for example, to invest in the next round, like 40% of the next round. I saw that recently in a friend's like term sheet, and I think some people think like, oh, you know what, like I can just negotiate that out later. Actually, like those terms are put in there for a reason, and so the time to negotiate that is when you're getting the term sheet, not like after you signed it, for sure. And it will absolutely like make your company a lot harder to invest in for a future investor if you're not careful with that. So I would say do be very careful about the terms you're receiving, because the seed round. Yeah, there was, so I like, was there the follow-up question around that, Rachel?
Yeah, no, I think there's a macro question a macroeconomic question from Stephanie, which I think is great. I'd love to touch a little bit on this too, is how much more do you expect? So in the past, we've seen a surge of startups come out of a slow economy. How much more do you expect to rise from this COVID recession time? And I would add to that, like, what do you expect to see for the fall, which is traditionally a very heavy fundraising time? They're all predictions in a world we've never lived in before, right? But I would love your thoughts and opinions on that.
We're honestly just seeing a lot, just a similar, if not higher pace of startups being founded right now because of these unique situations, I think. So for example, in virtual events, collaboration space, like these two in particular, as you can see from the last call, but then also just like, we're on Hopin right now. There's been so much creativity in these two sectors and lots of founders starting companies. I think I saw a company that started, a bunch of companies that started on the B2B side, just managing remote workspaces. And they were just founded honestly a couple of months ago, and they just sprinted in order to like go to market with a product. So I think, founders, like it's just incredible, like just how big of hustlers like a lot of founders are, and so they're able to just get a lot done, even since the beginning of COVID, and come out into market.
Awesome. And then fall is going to be a pretty good time for fundraising, like normal, because generally speaking, fall is a great time to fundraise as a startup, followed by.
I think it depends on the market. I think if the market has not sort of like, if we're in a bear rally and and that has like it disappeared and we're actually just in a bear market by the fall, I think funds will pull back a bit more and the fundraising environment will get harder again. If we are really in like a V-shaped recovery, like some people believe, then I think the fundraising environment will be strong.
Okay. Awesome. And then do you think like the stimulus is working? Do you think some of that is actually playing a role in keeping some market optimism going and keeping some of these companies operating, sort of above their sort of regressed projections? What are your thoughts on that?
Well, I think there's a lot of alignment amongst economists, and sort of like fund managers right now that the stimulus is what's propping up the stock market for as long as it is, right? There's been the largest stimulus in the history of the United States. I think something like like multiple, like, a couple $1 trillion essentially, like, poured into the economy at this point. And they, kind of like two trillion the first wave, and then it's just like unprecedented time. So I think, and all of that is essentially kind of band-aiding over a lot of, starting from like Fortune 500 sort of like debt obligations, all the way down to, startups. I think ended up taking fewer PPP loans because of all the reputational issues and all this negative press around that. But I think, it is absolutely kind of like a lifeline for a lot of the industry, or kind of kicking the can down the road right now. I mean, given the fundamentals are that we're in a place where there's like, some of the highest levels of corporate debt that we're like, that companies have right now in the US. And so the fundamentals would assume that there's going to be an adjustment to the market, and that will trickle down absolutely to tech as well. But we're not seeing that, and this is like absolutely like a time when FANG has been consolidating their power, like, and actually accelerating their business. Their business fundamentals are spectacular. And so a lot of people are saying, like, these companies are overvalued right now, but like not by that much based on the fundamentals. But maybe government control regulation may actually, like, stop the continued growth of these companies. So there's a lot of like uncertainty right now.
Right. And then Paula has a question for us. She says research goes or shows a lack of female founders in tech and AI, especially. Have you experienced this? Have you seen this as a trend? And then I would add to that.
Yeah, absolutely. I mean, I think there's been a lot of really great discussion that we've had, and also just in tech in general, that there's really like just not enough female founders, and also like, founders who are like, people of color, and minority founders, and how do we actually how do we level the playing field more, and how do we address kind of like, how do we encourage more of these founders to participate and start companies, and yeah, absolutely. Like in the like, I'm an investor in AI, and in I would say kind of like security and some of the other like infrastructure, some of the and as this light speed, and there are so few. There are like there's even like fewer founders in those categories. Like, right now there's still a lot of female founders that are in consumer tech categories. And I mean, I think there's like a feeling that they understand the buyer, like, consumer tech buyers tend to be female in a lot of different like categories. And so they understand the buyers more. There's not like this, there's fewer maybe preconceived notions that a lot of investors have. They're actually looking for a female founder maybe in some of these categories. But like, I think in the a lot in the B2B enterprise space, there's just fewer female founders.
And then in AI in particular, we know how important that is, because that has added effects, right? If there's a less diversity pool building the technology, that will cause major problems, I think, down the road in terms of how the AI is used. So it is really important. And it sounds like, Paula, maybe you're familiar with the space. Maybe you're starting an AI company, which we'd love to learn more about.
Yeah. I can tell you guys, maybe like there are founders like in the room right now that are interested in starting a company in some of these like infrastructure AI spaces, maybe security. And I would say, like, for early stage funds, for Lightspeed at any stage, it is critical. The thing that we will look at more than anything else is the technical capability of the team. So this is something to think about. I've actually personally like angel invested in a company that's like a female founder who is building a company in the sort of like data infra space, and she's an engineer by trade, and then she has like, really technical co-founders. I think this is a very important quality. If you're a female founder, you're not technical, it is very important for you to have a co-founder that is highly technical, not just highly technical, but is in maybe like the top like 10% of that engineer in that space, because the differentiation is in the tech, particularly earlier stage. And whereas some of the other categories, I think the differentiation may actually be in go-to-market. Do you understand your customer more? Like in some of those categories, like AI, the differentiation is in the technology.
Information. And so I would say, as we're starting to get to a close a little bit, what companies are you most excited about, Amy, right now? Like, what companies are you tracking and they're just like really exciting, or where you're like, oh, I'm really excited about this space and its potential?
A couple of spaces I'm really excited about. I mean, we're investors in Epic Games, and I'm personally, I love gaming, and I continue to look at I talk to a lot of companies in the gaming space. Would love to make more investments there. I'm a personal investor in online grocery, and I've talked to probably every single online food company at scale in the last couple of months, because I mean, this is probably in the consumer sector has experienced more acceleration than almost any other category, and we have a thesis that that consumer behavior is just permanently altered in that space. We are extremely excited about collaboration and productivity. So continue to break down, if you think about it, like the Google or the Microsoft productivity suite, breaking down to pieces, people reimagining what spreadsheets and Google Docs look like, and there's a lot of companies in that space. I mean, older generation like Smartsheet, $6 billion market cap company today, at least I think. And then you got the Notions and Airtables, the kind of the more modern versions like Monday.com, and then new companies coming out right now in this COVID environment, because everyone has shifted to remote work. And so there's been so much creativity in that. We love that. We've made a number of investments in this category in the last couple of months, and we'll continue doing investments there. And then I would say, on the infrastructure side, I'm a believer that we're in this 10-year life cycle of CIOs at enterprise companies all moving gradually from on-prem to cloud infrastructure. And so this was an incredibly diverse and with really great technical tech progress, I would say, from startups even pre-COVID, and people have continued to buy, and we've continued to fund companies through COVID.
Wow, that sounds awesome. Lots of exciting things on the horizon for Lightspeed and for you. And I would just say in our last few minutes, I would ask, what is any advice you have for founders who are at the early stage right now? Any advice at all, more general or more tactical? Totally up to you for the female founders all around the world who are joining us today.
Yeah, I would say, now is a great time as ever to start a company. So I totally encourage it. I think one of the things you should think about is in a very uncertain funding environment, whereas I think a lot of founders maybe pre-COVID were like, well, you know what, the funding environment is great. It's really honestly not that difficult to raise $500K or $1 million, a couple $1 million. If you have the right playbook, I think if you understand how to do it, I think if you just, no need to reinvent the wheel. There's so many playbooks around how to raise a seed round, and you should absolutely do your homework on that before going out and doing it. But I think in this environment, it's only gotten a little bit more uncertain. And so I don't know, nobody knows in 12 months time when you maybe need to raise that Series A or institutional seed, what the environment will look like. And so in this environment, keeping your burn as low as possible and just being really flexible is a strength that I think a lot of founders can take advantage of, because if you raise around now, maybe you can go out and raise again in 12 months, but maybe the window's not going to be available for another couple of years. You just don't know. So so I would say being lean in this time is definitely looked upon positively.
Awesome. And then I would say, how can founders keep in touch with you or connect with you if they'd find you on LinkedIn, I assume?
Yeah, you can find me on LinkedIn.
Awesome. And any other parting words for founders before we sort of wrap up for today?
I just want to say thanks so much for your time, and joining the session. Really appreciate it, and really great and thank you, Rachel, for moderating.
Of course. Thank you, Amy. Your insights as always really help founders, and I think everyone on the call has learned a lot. I'm ready to jump over to my next session. I'm going to be talking about pitching and idea stage, ideation, if anyone's interested. But thank you, ladies, so much for joining us today. Have a wonderful morning, afternoon, and evening, and great day. Thanks, everyone. Thanks, Amy.
Thank you.